So what do you consider is the keys to being a good investor in multifamily and apartment complexes?
That's a good question, and I think some of the keys are, there's a couple things. Number one is keeping cash flow as the chief investment criteria. A lot of people buy here in the Bay Area, in San Francisco and Oakland, San Jose, for appreciation. In other words, they're putting their money into a building for the long-term growth of the asset, which is good. However, what I would say is what's chiefly important, based on what we've learned on this last market, is to keep cash flow, positive cash flow, at the centerpiece of your investment strategy, regardless of what that percentage rate of return. Even if you invest in San Francisco, you may only get a 3 or 4% rate of return, but it must be positive. You can't invest and be negative. In Oakland, you're going to have a much higher rate of return than in San Francisco from a cash flow standpoint. San Francisco property may grow more in value. Same thing with San Jose. However, you must be cash flow positive, because if you put yourself in a cash flow negative situation, you know, you're setting yourself up for failure, and your only form of success would be growth of the asset. If for whatever reason that does not happen, you're going to be screwed. So cash flow is the chief determinant, or the chief thing that we all should be looking for as investors, whether that's multifamily or whatever it is in terms of real estate, but specifically multifamily.